Okay, now, so these questions, they require you to look at the informations. They give you their bank account, they give you their opening and their closing. Okay, this is opening, this is closing. So to tell you all the information, they require you to prepare profit and loss and also financial positions. Okay, so if you want to prepare profit and loss and financial positions, what is the information you need? You need sales, you need purchase, you need opening stock. Here you have opening stock, do you? You have closing stock, you have opening stock, you need sales, you need purchase. Okay, then you need expenses. So here you have all the expenses, rental, wages, auto repair, all this drawing, utility, interest. So if you look at here, interest, here also got interest, right? So you got prepaid interest. Here got current year paid interest. So for interest, you need to open T account. Same thing go for accrual. You have accrual, rental here, and here you also have rental, right? So means that we need to open T account in order to figure out the figures in your income statement. Now, next year. Beside this, then if you look at here, debtors, creditors, you have debtors here, you have creditors here. So open a T account, then you can figure out how much is your credit sales and credit purchase. Temporarily, you get the idea first. Yeah, I recorded already. Now, so here, here is that all the receipts are bank and all payments are made from bank account. So basically, you don't have much cash sales figure, because all receipts are bank and all payment are made from your bank account. So from your bank account, you can see all the transactions. The debtors of 5,660 included in the closing inventory is to be written off as irrecoverable debt. So it means that you have one bad debt but have yet to be recorded. So now you need to record bad debts. So can we, okay. So if you look at this, let's say we open a debtors account. Okay. If you open your debtors account, then you should be able to see that you will have a bad debt there. Okay. So from the first informations here, you can see you have a bad debt. This one. Here. Opening from the questions. Then here you have the closing. Yes. Okay. So you have an opening here. Wait for a minute. Okay. You have this opening here. Is from your questions. Okay. And then closing is also from the questions. But then if you look at here, the question say a trade debtors of 5660 including in the closing balance means that including in here 5660 it should be a bad debt. So here you record a bad debt. So now your closing will become lesser. From 15,450 you minus the bad debts. Is that okay or not? If you look at adjustment number 2, they tell you that bad debts, you have a debtors 5660 is included in the closing balance. Means that in this 15,000, you include a 5660. Okay. Now these debtors will be write off as irrecoverable debts. Means that this debtors is 5660 is a bad debt, but this bad debt is already included in here. So now my closing balance, I need to update my closing balance should be minus 5660 and become 9790 only. So when you do your T account opening, you have it here, and closing become 97960. You need to add on one bad debt, 5660. Now bank amount is from the question. So if you see bank amount here, you have 54561. So here you have 54561. So in this case, you know my credit sales for this year, 55,000. This one, are you okay, guys? Okay, Now next, and other informations. Here, depreciation is 20% at, okay, now this one, no depreciation is provided in the year of disposal. Depreciation at the rate of 20% held at the end of each year, no depreciation in the year of disposal. Discount received from trade payables. So next thing, if you look at here, you have a disposal, and then you have a depreciation. So you need to calculate your depreciations. Question tell you that depreciation is based on year-end figure, right? And no depreciations in the year of disposal. Get it? Depreciation based on year-end figure, and no depreciation in the year of disposal. So if you look at here, this one, beginning of the year you have, year-end no more. So this is disposal, right? So disposal, no depreciations. Okay, and here beginning you have depreciation not yet count, right? Just now question say depreciation based on year-end figure 20%, so it become 8,600. Here times 20% based on year-end figure. Okay or not, guys? So when you do your T account, now you have a depreciation of 8,600. Next thing, if you look at the questions, okay, the question mentions about the disposal also, right? So you need to check, do you have a gain or loss on disposal? If you look at here, disposal account, they give you this information. Cost 30,000, 20. Accumulated depreciation is 12,000. Selling price 20,000. So disposal account, gain or loss? Gain, right? Here you got 32,000. Here you should have 32,000 as well. So you make a gain of 1,1980. So later when you prepare your income statement, yeah, you should have a gain on disposal 1,980. You guys follow? Okay, yeah. Gain on disposal 1,980. Okay, now next thing is this one, settle number 3 done. Okay, then number 4, discount received for trade payable. So you need to open a trade payable account. So if you look at here, your trade payable account, you should have opening, then closing, bank amount, as well as your discount received. I put here lah, let's say here. Opening is from your questions. You look at here. Opening, you have 12,500. Okay, and then closing you have 14,002. Okay, so opening here, closing, and according to question, discount received 6,360. So later on you will have this income, other income, you have this discount received, and also in your just now other income you have this one, first discount received. Another one is just now the gain on disposal. This is also other income. Get it? Then expenses, you have these expenses. All the rest of here is also your expenses. Rental is your expenses. Motor vehicle, all this is your expenses. Drawing is not. Interest is your expenses. Okay. Now here you buy a motor vehicles, right? So 43,000 double entry go into here. So no problem. Now seems like most of the thing you have done. The only thing is you look at here. Just now from the very beginning, I say wages. Here you got accrued rental. You have prepaid interest. So prepaid interest, you have to open interest account. Rental, you have to open account. So let's see how should you open it. Because it's accrued, right? When you record into your income statement, you only record current year expenses. So in your current year expenses here, income statement, let's see this. You should have these two. Rental. If you look at rental, opening accrual, so it's on credit side, okay, 1,200, and then closing is 900, okay, plus current year payment 24,000. So rental here we record bank payment 24,000. So you in your P&L you should only record 23,000. Means later in your income statement, your expenses in your income statement is this amount, not the cash payment amount, guys. In cash flow, you use cash payment account. But here, when you prepare your income statement, you use accrual basis. So you use 23,600. So you don't mix up chapter 4 with chapter cash flow. Most of the time, students too much on cash flow, then they forgot P&L. This one go to P&L figure. We are looking for P&L income statement, not doing cash flow. Are you guys clear? Boleh kah? Okay. Now, same go for your interest. If you look at here, interest. Here you have prepared interest. You have opening prepared. So prepared asset here. Okay. And then current year bank payment 35 here 3580. So you just record down, and then this interest expenses for current year is 4160. So now you got your sales figure, right? You look at here. You got your sales figure, you got your purchase figure, okay? You got your sales, you got your purchase, and then you got your opening inventory, you got your closing inventory, you can do your gross profit, and then plus the other income from disposal and also the other income from discount receipt, and minus all the expenses here, all the expenses, but bear in mind, your rental and your interest, you have to check out the T account. Okay, you cannot use the rest. The rest, wages, motor repair, all this you can directly use this figure because you don't have accrued and prepared. So no need to do adjustment. Okay, now then you can finish your income statement. After finish your income statement, then you can start to do your financial positions. Start with your motor vehicle asset. Now this year you have 43,000. Now if you look at here, you have asset liability, but you don't have equity. Right, you don't have capital account. So you need to figure out how much is your capital at the beginning of the year and then at the closing of the year. Okay, now next year. So asset, put in all the fixed asset here, all the liability, all the current asset, then debtors, inventory, okay, and your bank balance. This is your asset, current asset. After that, prepare your capital. You have to figure out how much is your capital. Remember here you have capital, additional capital 200,000. So just figure out how much is your capital. Then prepare your current liability. If you see the question, look at this question, you don't have a long-term liability because they never shows a loan, right? But bear in mind, when you prepare your capital, there is a drawing there in your bank account. In your bank account here, you have a drawing. So you figure out your opening capital plus current year additional capital minus your drawing plus current year profit, then it becomes your closing capital. You don't use here directly minus plus minus get closing capital, not like this. Capital, your capital account, if you still remember your opening, you have to get a balance for sure. This one opening plus profit, okay, plus your profit minus your drawing, then you get your closing, okay. But this year you got additional, so you put in the additional 200,000 from your bank just now, from here 200,000, then you get the closing figures. Okay, so your capital figure, you don't straight away here plus minus you get a wrong figure. So this one, are you okay, guys? Questions 2.